Are you transacting in the world of Web3? Are you a business owner or a collector that is buying or selling NFTs? Whether you're on the buy side of the transaction or the sell side of the transaction, there can be numerous tax implications to buying or selling NFTs. And these tax implications can have a large effect on your bottom line. It's important to understand the tax implications to any transaction that you take part in before the transaction takes place so you can know what to expect for tax purposes. In this video, I'm going to go over the details for both collectors and sellers of NFTs that are transacting in the world of Web3 so they understand what they need to know from a tax and accounting perspective. NFT collectors, what tax implications can apply to your NFT transactions? You can have a couple different tax exposures as an NFT collector depending on the nature of your transaction. The first potential tax implication is going to be capital gains. Capital gains will take place anytime that you purchase an NFT and then you subsequently sell that NFT. You can have a capital gains or loss depending on the amount that you purchased it for and the amount that you sold it for. If you sold it for more or less than you purchased it for, that's going to dictate the gain or loss. One recent tax development that impacts the taxability of your capital gains or losses is the IRS Notice 2023-27, which I've actually done a full separate video on. This guidance from the IRS taxes certain NFTs as collectibles and certain NFTs as investments. When you have a capital gain on an NFT that's taxed as a collectible, you're going to have a higher capital gains rate that you have to pay, usually a rate of 28%, compared to when you sell investments. If you hold them for long term, you can have a lower rate, usually 20%. So we do go over a whole video on the intricacies of, where and when these different tax rates apply to NFT sales. But the big thing to keep in mind for the purposes of this video is that you're going to have capital gains exposure anytime that you're selling an NFT that you previously purchased. Likewise, when you're purchasing an NFT, usually you're going to be purchasing that NFT with cryptocurrency or with another digital asset, and this is likely to trigger a taxable gain or loss associated with that asset as well. Another tax exposure that you as an NFT collector can have is income taxes. You can have income tax exposure if you're receiving value on the blockchain. This can be in the form of rewards for staking an asset. It can be in the form of airdrops or any other type of value that you're receiving in the form of income. We're going to have to claim this, whether it takes the form of an NFT or cryptocurrency. If you're receiving consideration and value and you have control over that asset, most likely we're going to have to claim this as income. When you claim these types of transactions as income, that's also going to set your cost basis in that asset. So then if you sell it at a subsequent date, you're not going to get double taxed on that income. You'll recognize the gain or loss based off of the proceeds and that cost basis that you set in that asset when you first receive it and claim it as income. Those are the two biggest tax exposures that you as a collector is going to have, is the capital gains exposure and the income tax exposure. There is an additional consideration for you as a collector anytime you're purchasing an NFT, and that is use taxes. Most of these NFT companies should be collecting sales taxes at the point of sale from you when you're purchasing an NFT. You probably noticed that in most cases this isn't taking place. And when sales taxes aren't collected on transactions that do have this liability, in most states that liability shifts to the individual in the form of use taxes, which should be claimed on your return. So use taxes is a tax that usually goes overlooked and there's a lot less compliance at the individual level. But if you're purchasing NFTs, it's likely that you have this tax exposure as well. NFT creators, do you understand the tax implications to selling your NFTs and transacting in your day-to-day business? Let's get into it. There are several different tax exposures that you as an NFT seller or a Web3 business selling NFTs can be exposed to. The first one is income taxes. you're going to have to pay income on any value that you receive in consideration for selling your NFTs based off of the date that you receive it. This should be fairly straightforward, but we need to make sure that we're calculating this income based off of the right date, timing, fair market value, and that this is getting considered and added into the cost basis of those assets that you receive. So we're accounting for this appropriately and claiming it for tax purposes appropriately. In addition to income taxes, when you're selling your NFTs, many NFT sellers are going to also have self-employment tax exposure. That's because when you're selling NFTs, if you're doing this in the capacity of a trade or a business, that's going to expose you to self-employment taxes. So on top of just your income taxes, you're going to also have to pay self-employment taxes. There are tax planning strategies to help possibly mitigate some of the self-employment taxes depending on your overall fact pattern. So this is something that, we need to look at on a case-by-case basis. But from an income tax perspective, you're going to have the income tax exposure, you're going to have the self-employment tax exposure. On top of this, you have the potential for capital gains exposure. You can have capital gains exposure anytime you're selling an asset. This can be an NFT or a cryptocurrency that you've held for a period of time. There could be the potential for a difference in the fair market value during the duration of that holding period from when you first acquired the asset to when you sold it. This is what's going to create the gain or loss when you do sell that asset, which will trigger the capital gain or loss. So anytime you're buying and selling cryptocurrency in the course of your business, even if this is crypto you've received and then sold it, there's a potential for capital gains exposure there that you need to be aware of. In addition to these income tax exposures and the capital gains exposure, we also need to keep in mind one of the most overlooked tax considerations for NFT sellers, and that's sales taxes. You should be collecting sales taxes on your sales across the United States that you're selling for NFTs. Now, obviously, the rules are going to vary state to state, and I have many separate videos that goes over this, but it's important to understand that sales taxes likely applies to the sales of NFTs in over 30 states that tax digital products or goods. And we've seen several states already provide explicit guidance related to NFTs, including Washington, Pennsylvania, Minnesota, along with other states. So NFT sales taxes is going to be a huge industry-wide issue going forward because it's such an overlooked tax consideration in our industry. This is shaping up to be Wayfair 2.0 and a huge tax controversy issue in the coming years. So it's important that if you're selling NFTs that you get ahead of this, that you use a software that automates this process specifically for blockchain transactions, and that you get into compliance with this before the state tax agencies come knocking. So what should Web3 businesses selling NFTs and collectors that are in the Web3 world purchasing NFTs do to make sure that they get into compliance for tax and accounting purposes? Number one is make sure that you consult with an experienced tax professional or CPA that works in this industry and understands all the intricacies of it. That's because the tax rules and regulations are constantly changing, and that rate of change is just going to be increasing in the future. So we need to make sure that we stay on top of all the various tax implications as they change, and as the industry moves forward and there's new different types of transactions and asset classes, we need to make sure that we're staying on top of all this so we even have a chance at compliance. Outside of staying on top of the tax changes, we need to make sure that we're keeping solid records and documentation. I often say an audit is won before it begins, and the way that it's won is by appropriately documenting everything that happens throughout the year, in addition to documenting the reasoning and position around any tax positions that we take regarding any tax treatment of specific types of transactions that you may be taking place in. So work with a tax professional and then make sure that through that process of working with the tax professional and an accountant, that we're documenting all of your transactions and we're documenting all of your tax positions. So in the event of an audit, we have everything that we need in one place. We're not scrambling. We're in a position where we're prepared for the auditor. Now, a couple things that will help through this process. Number one is using a specialized software for compliance. So this is going to be at least a digital asset accounting software. So at the individual side, you want to use a digital asset accounting software that is going to be highly functional and be able to accommodate NFTs. Some of these softwares are going to be better than others, but it's important that we use a software that's going to accommodate NFTs. And then also keep in mind that these softwares are not going to be plug and play, that we need to be very careful with scrutinizing the fair market values that we apply to NFT mints and NFT sales, and overall doing very strong due diligence regarding the valuations applied to the transactions, as well as your ending cost basis across all of these transactions. So we want to use a software to help leverage this, to make sure that we're consolidating all of the data in one place. Similarly, on the Web3 side, your digital asset accounting software and subledger should have functionality where we can connect that information to your traditional accounting system, which may be in QuickBooks, Xero, or another accounting system. The way that we're able to get one set of consolidated financial statements is via journal entries between these two accounting systems, and there are many softwares that can automate this process. So we want to make sure that we're considering that, and we're using a streamlined method to make sure that we have one set of cohesive financial statements that show both our digital asset activity as well as our traditional activity that's not on the blockchain, that's taking place across fiat transactions in the traditional banking system. Additionally, outside of that, as an NFT seller, you want to use an automated sales tax solution to make sure that you're appropriately collecting, remitting, and filing sales taxes for all of your sales across the United States. So you want something that automates the process from collecting your customers' information to collecting the sales taxes to reporting it on the back end. Me and my team have built this at Digital Impost. So if you're looking for a solution there, Digital Impost is the first solution that is native to NFTs and blockchain, and it is the industry standard. The world of Web3 taxes and NFT taxes and accounting are extremely complex, and the important thing to keep in mind is that you should be working with an experienced tax professional and an experienced CPA to make sure that your accounting and your taxes are in order, and that you're prepared for an audit and you're prepared to optimize your taxes and accounting. If you're looking to get your Web3 accounting or your NFT accounting and taxes in order, and you're looking for an experienced CPA firm, look no further than Camuso CPA. We work specifically with Web3 businesses and digital asset investors, and we've been specifically working in this space since 2016. Regardless of the complexity of your accounting and tax needs from a digital asset perspective, Camuso CPA has you covered. Contact me and my team today at camusocpa.com to schedule a complimentary initial consultation with me so we can discuss your needs to see if we're a good fit to work together.